Okay. Good morning, everyone. My name is Divya Boba. I'd like to welcome each one of you for the session on overview of auditing SAP. Before we get started, just quick things to remember. Please stay muted throughout the session. You're not allowed to be unmute just to maintain some quietness throughout the session. Please stay active throughout the session. The content is linked up from the starting up until the end. So please be active throughout the session. If you have any questions during any part of the session, you're free to actually post your questions in the chat or post the session. You can also email me. But then if there's any question that is asked by any other participant within the meeting, please do respect. There's no silly question. So please be mindful of what is being responded to any other participant. In case you feel this session is useful to any of your friends or colleagues, remember to also share this link. It is also being streamed on YouTube. You will also have the chat, the URL posted on the chat. So please also kind of share the link with your colleagues as required. So before I start on this session, right, when there was a thought process of such session being conducted, there was a mixed audience. There were your users from or people from audit background. There were people from non-audit background who wanted to really understand what auditors will be actually doing, what is happening in this world of audit. The area is very focused. So I thought we'll have kind of a background about audit and then also touch base upon the SAP core area, which is the prime focus. So this session is mostly focused on that. And after the session, you'll be able to understand some of the key myths and pitfalls of the audit. What are the different types of audit and a typical methodology of an audit? What exactly do we audit in SAP? And what are the key controls in one business process area? And that is procure to pay cycle. So let's get started with each of these areas now. Myths or pitfalls. The first thing when you start talking about audit is like, are you an accountant? Is this auditor an accountant? So it's by default considered that all auditors are accountants, it's most unlikely that every auditor need to be an accountant. Yes, auditor having a knowledge about accounting background do help. It kind of gives them an understanding about the finance element of an organization, but there is more lot that an auditor does. An auditor will be doing an operational audit, it could be a compliance audit, it could be an environmental audit, it could be an IT related audit, which is more wider than an accountant who is working on an accounting kind of an audit. So it is very important to kind of understand that auditors are not only accountants. There are other auditors, and other kind of expertise is also required to do an audit. So no, auditors are not just accountants. There's much more than being an accountant to do an audit. The next one you kind of keep on hearing is that auditors are nitpickers, they're fault finders, and every time they come and do an audit, they try to ensure that more work is added to us. They don't want a real work to be done. They're too much going into nitty gritty details of a process. They try and tell that there's no sign off on so and so date, instead it is signed off yesterday or tomorrow. But no, auditors main focus is on the risks. What are the major risks that are available in the organization that needs to be kind of mitigated? What are the control weaknesses that are available? The mindset of an auditor will be from a risk based thinking. They would be thinking about, say for example, they could be revealing something about a $60 million cost optimization versus maybe a $5 human error. If auditors start focusing on more nitty-gritty details which are of minor importance, they would not have time to focus on major elements which could be more important for companies or for companies' value addition. This is one of the most common thing we see. Do not let auditors know any information unless asked for. If you are an auditor or if you are a business user, whenever an audit team member is approaching you, you would not give complete information in the first place. This is basic violation of both of the interests. If an auditor has to be doing the right job, being able to give right impact, do give the auditor the right information, asked and non-asked. It is very important that the auditor is being given the information so the auditor can actually assess the right risk factors available in that piece of information and be giving it to the organization for the benefit of it. The optimization comes when the information is available for the auditors. If you had information from the audit team member, it's more likely that the auditor could increase the scope of work and try and cover what else is being missing that they are not aware of. This is a big time waste for both of the team players, I would say. So when an audit is happening, be transparent, be open to the company. It's not a personal target that the auditor will be doing. It's basically on the process. It's basically on the organizational control weaknesses, process control weaknesses. So do not let any information skip by auditors if they are coming to you for an audit specifically. Audits are conducted against a predefined checklist. This is one of the most common myth. I hope it is diminishing as the time passes by. It's not always that audits are conducted against a predefined checklist. It is very important to understand that audits are very dynamic in nature. The risks are very dynamic in nature. The risk keeps changing as the environment keeps enhancing its technology as well. So audits are not conducted against a predefined checklist. But one could argue that if it's a compliance audit or if it's a regulator or regulatory audit, that needs to be conducted on every annual basis. It's most unlikely that the number of controls that are to be tested would change every year. So that is when the regulatory compliance would be checked more or less the same controls. But it doesn't mean that all of the audits conducted by the auditor come with a predefined checklist where you just mark yes, no, yes, no. It's not like that. They're very dynamic in nature, and the type of risks and the controls that would be tested by the auditor varies from time to time. The last key myth that we would be looking at is audit is the corporate police function. This is a big no. So when an auditor is seen next to any of the team member, treat them like your team player. And they are there to actually drive process efficiencies along with you. They are the trusted advisors of the business. The more important thing, in my opinion, is try to be, as an auditor, you need to try and act to create some rapport with the auditees. You need to build that trust with the auditees. That kind of gives them comfort in disclosing the information. If you kind of behave arrogantly, rudely, show up your negative attitude to the team players, more likely you would face resistance from them. Your observations might not be welcoming by them, but in case you maintain some good rapport with them, in case you show them your trustworthiness, if you kind of show the results on how optimized value benefits you're bringing into them, the findings that the auditor would be highlighting would be more likely looked up the opportunities for improvement. They would more likely wanted to consider them for improvement. They'd be more welcoming for auditors. The information sharing will be more better than compared to any other attitude. So please understand that when audit team is approaching the business units and when the business is trying to talk to the audit team members, remove these myths out of the mind. They are kind of working from mostly from the inside kind of an audit to oversight kind of an audit to the most trusted value advisors. So audit team is basically the one which is also going in parallel to the business and not something that is completely isolated. So please understand that they're not the corporate police functions as well. Let's move on. Types of internal audit. This is not the whole comprehensive list, I would say, but if somebody is going to ask, what are the different types of audit that's available, for example, these are the key ones. Let's start with HSC, go up until clockwise to compliance audits. HSC, health, safety, and environment audits. This is one of the primary area for HSC related auditors, where a lot of health related activities are considered, a lot of environment related activities are kind of reviewed. If there's any environment regulation that an organization has to comply with, is there any impact on the business operations on the environment? So all of these elements will be captured as part of HSC audits. Performance audit. So in any company, the top management would be setting up few performance goals to achieve, and the success criteria of the organization, the success of the business operations depend on how well those criteria have been met or unmet. So this is a kind of audit that you would try and understand. So what are the matrices that are available? So what are the actions or kind of measures taken by respective business units to achieve those metrics? What are the bottlenecks available? So would they be reaching on at that time, or what are the kind of controls that need to be put in order to reach there? Are there any weaknesses or shortcuts or cutting the corners or quality is being compromised just because those metrics have to be met? So these are the elements that would be covered as part of the performance audits. Operational audits is the third category that we're talking about. This audit category would be focusing on the operations of the business processes itself. How to drive business process efficiencies? Are there any gaps in the business processes by design? Can we ensure that, for example, how do you drive efficiency? Maybe you could propose leveraging an automated system instead of doing some manual work that could probably save some time, save some cost on the person. So this is where the operational efficiencies and control weaknesses within the operational business activities are kind of considered and reviewed. Information technology audit is a very broad term. This is where all of the technology systems are kind of considered for review. More importantly, like the infrastructure underlying the technology is also reviewed. So things like ITGCs, the change management, the access controls, the applications review, the infrastructure of these applications, all of these technology related elements are kind of considered in the information technology audit bucket. Compliance audit is a very interesting topic, and one has to be really understanding of what compliance audit has been carried out. Let's take an example of a GDPR that everyone talks of. GDPR, if your company is supposed to be a GDPR compliant, then it is very important that a compliance against GDPR regulation has been conducted according to the GDPR requirements that you are supposed to be compliant with. If the audit is not happening, and assuming that the business is not compliant with the required regulation, there could be a lot of penalties that your company has to be paying for. So this is one area where compliance to regulations, compliance to internal processes, compliance to environmental acts at some point, compliance to any legal requirements that you need to adhere to. So all of these compliance requirements are considered as part of these compliance audits. Typical audit methodology. Before I start on discussing about this slide, I'd like to tell one thing to the non-audit participants that we have here. When an audit is starting, there would be a set of process that the audit team members will already have, because every company that has an audit team as an in-house audit team would have a methodology that they would have described. How to start the audit, how do you carry out the audit, how do you end the audit. But in practice, there could be various methodologies that are applicable for each and every company. It could vary from company to company, but in principle there are major three steps that are involved. It starts with the planning, it ends up with reporting and follow up. So as part of the planning activity, without going into each of these boxes, let's discuss what happens in the typical planning activity or phase of an audit. So you first, based on a risk assessment that the audit team will conduct, they will try and assess the risk landscape of the organization. Considering the risk landscape of the organization, there's a specific area that the audit team member wanted to focus on. That's basically the subject of your audit. There could be a specific objective that you might want to achieve as part of your audit. It could be maybe you want to achieve some cost optimizations. Maybe you could want to you want to review some design elements related to that. Maybe you want to drive some process efficiencies. So these could be your different types of objectives that you could plan as part of your planning phase of it. So what's the scope? It could be scoping in terms of period. For example, I would want to review transactions, for example, starting 2019 up until mid 2020. The scope could be in terms of systems. You could tell, I want to review SAP so and so module, or you can tell, I want to review a legacy system of, say, Maximo, Oracle, or whatever it could be. Maybe you want to review some infrastructure related as part of it. So that's your scoping of it. Audit planning is typically where you try to identify the stakeholders, who is the right set of stakeholders called as auditees to conduct the audit, what kind of information you might potentially require to conduct this audit. So this will be part of the audit planning exercise. And you will also try and conduct your opening meeting with the team to kind of describe the auditees. What's your audit? What are your objectives of the audit? When do you want to start the audit? And when what is the scope of your audit? You will do also opening meeting as part of the planning phase. The first step for the field work and the last step in the planning phase is you determining your audit procedures. In other terms, this is a risk and control matrix or audit program, in other words. The audit procedures are basically the types of risks that you have to kind of look for, and what are the controls you are expecting to be in place to ensure that those risks are not materialized, and what kind of testing procedures you need to follow. In case you're doing a change management audit, your testing procedures could all be like, look at the change management procedure, get the number of changes, review the changes, and so on and so forth. So this is what you kind of document as a preliminary step in the determine audit procedures stage. So once you kind of have a preliminary step, please try and understand that the audit process and methodology is not always waterfall. It could sometimes be overlapping in between. The audit procedures may be defined at a planning phase, but then when you actually go to the fieldwork phase, it could evolve. So it's like an evolving document up until you complete your fieldwork as well. In the field work, from whatever planning activity you have done, this is where you actually get your data that is required. It could be documents like policies and procedures or standards. It could be access to a system that you would want to review, or access to any other technology area that you would want to review. Once you have the right data with you, that's when you start testing the controls. This is where you try to assess what is the level of control we have for the types of risk we have identified in the last landscape. What are the type of controls that should be applicable? Is it really up to the mark? Is it completely controlled? Is it the adequacy of control the way it is expected? Do we have any deficit in the control? Is the control the way it needs to be designed, or can there be any improvement in the control? So these are the things you start testing in the control testing area. If say for example, the initial identification of control is that you need an automated control, for example, and in the fieldwork phase, you realize that there is no automated control. An auditor should always not stick to the book as well. So you need to understand what alternate controls are available. If it's manual control, even if it's a detective or a corrective control, if not preventive, you need to try and understand what is the probability of the risk being materialized. If it's not a system control, can other alternate controls still do the work for us in the organization? So this is where auditors' experience and judgment has to be brought in, and during the testing process of the control. So once you have tested, you will have your issues, and then you'll have to do your validation. Please understand that at this point you only have potential gaps or potential findings, potential observations. These are not final. After you have the list of control gaps from the testing, you will then understand that these are my potential gaps available based on my audit scope. You will go back to your auditee or the stakeholders that you have identified, do a validation of them. If you're doing a procure-to-pay audit, for example, you could tell them, hey, listen, based on my scope of procure to pay audit, I have done the audit and I have these many number of observations. And then they would say, you know what, Divya, you have not considered our approval process. If you would have considered, you might not have one and seventh observation. Probably you probably have to go back to the testing of controls in case you don't have the right set of information there, and then you go back and then you switch back to the validation phase again. Assuming all of your gaps identified are validated and vouched by the respective team member, you would then go ahead and actually document your results and then move to your reporting phase. Every company will typically have a reporting structure, formal reporting way of putting up things in a formal way. As a minimum, you would try and document what is the actual issue, what did you test, and what did you note? What is the potential impact that could occur if that risk or gap you have identified is not being mitigated or fixed, or controls not being applied to that? And the last thing that you would put up in the report is basically your recommendations to mitigate the risks that you have identified. Remember, when you're putting in the recommendations, you need to consider a couple of elements here. One, is it practically feasible? Two, is it really important of investing time and effort and budget or whatsoever in fixing that? Is the impact of fixing the gap equal or greater than the risk being materialized? So you need to assess the effort and the benefit of having the control being implemented versus the risk being mitigated here as well. So auditors should take a pure informed call, professional call here when trying to suggest the right recommendations to the team members here. You do the draft report, and then it undergoes through your internal processes review, and then you issue the report. Issuing a report, before that there is a small activity but a very major activity, which is basically where you obtain the action plans from your auditees or stakeholders. You're going to tell, look, this is the findings that we have already validated during our field work, so please let me know what would be your action plan to close these findings. This is where you mutually agree on an action plan and a date with an auditee, and then kind of issue the report. Most of the organizations consider doing an auditing is a very important step. I agree. But equally, there is another important step, which is a follow up stage. So once you have conducted your audit, this is where you're trying to tell, my company has, in this process, has 1, 3, and 5 gaps which are major in nature. But you, as an auditor, the milestone is only achieved, and you would be and you would be actually satisfying the organization in a better way only if you ensure that those gaps are actioned by your members of the auditee, and then you follow up on them for effective closure. Only when the risks are closed, depending on the actions agreed during the issuance of the report, that's when the audit typically closes. Technically, you can say that it is closed at an issue report stage, but then it is actually closed at a follow up phase when the actual closure happens of the report. Let's head to our core area here. What is SAP or SAP? First thing first, SAP actually stands for Systems, Applications, and Products in Data Processing. So there is a reason, and there's a lot of debate. Personally, I don't mind calling it SAP or SAP, but since it's a German product that was almost there in 1970s, and according to SAP stats that they have published on their website, they've reached over 180 plus countries and have a customer base of about 440,000 plus. In German, SAP means pig. So you need to be careful when you're working with German people. More or less, Germans have got used to it now. When somebody is telling it's a SAP, 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 so they know that you're not trying to offend them anymore. But you need to be watchful and mindful when you're trying to talk about SAP with a German person during any of your implementations or with any of your auditing you come across them. But otherwise, SAP is the right way of telling instead of SAP. But personally, there's nothing wrong in if you tell SAP as well. The message I want to bring from this slide is basically on the URL part, the open.sap.com. Most of you might really want to be trained on what are the kind of SAP offerings that are there. I want to learn more about SAP, but it's been pretty pricey outside. And anybody trying to teach about SAP, it comes with a dollar amount, and I might not have right amount of money to spend on it. I don't have time to attend the course at the time they are kind of conducting it. Very much practical. So opensap.com is a platform for somebody like you. So this is a platform which offers wide number of SAP courses absolutely free. You can register yourself with your personal ID. There's absolutely no down payment that needs to be made. It has a lot of emerging courses that comes up with all most of the SAP products. It also has some process understanding stuff. So it has two different categories of videos that they publish. One is the live teaching series. If in case you attend those live teaching series, you might get some knowledge out of them, and there are some assessments that need to be done. I think it's 50% passing or something. So if you pass this assessment, you could also get a record of achievement, like a certificate from the SAP itself. There are multiple other courses where you can take it on demand, where you can play it offline at your pace whenever you have time on various technologies and offerings that they would have. So this is one of the best platforms where you can enhance your knowledge and upgrade yourself. People who have started learning about SAP like back 10, 15 years ago, in case you want to know what's happening in the latest version, the cloud era. So this is a go-to platform for you to start with. There have been multiple SAP versions that has been released from time to time, but currently most of the companies globally are either on ECC6 or HANA version. Like we have in HANA or the cloud version. This is the first time SAP has a cloud version in its ERP, and that's basically HANA 909, which is on-premises version, or 908, which is a cloud version. Logging into the SAP system. This is a very basic thing, but I just bought it because there are so many of them who might not have worked on SAP till date at all. So when you have an SAP installed on the system, you see some logo like that with a blue and yellow arrow mark, which is SAP logon. If you don't find the icon, you just try to go on the start menu and type SAP, and you probably would be seeing some file which you could navigate to. If the company has not implemented a single sign-on, you will have to enter your username and password. But if you have a single sign-on, you will basically see your connection details over there. Just double click on the connection details, and you will actually get through the system. Once you get through the system, this is the screen that you would see. The expectation here or anybody else during your career is not to remember what these fields are or to memorize what these fields are, but there are two or three terminologies that you need to get a hang of here. One is basically a command field. This is the field where you're talking to SAP system. You're commanding the system to give you some information. So basically, this is your dialog box. This is where you enter most of the things. So you need to know what is the command field here. Menu bar that you see starts with a menu, so it's very easy to remember that it's a menu bar. It has a set of menu, just like the menu we have it in any of the restaurants, so it comes with its own menu. The standard toolbar is another thing that you would remember, because this is where a lot of features that you would kind of use when you start SAP. It has functionalities like page up, page down, new session. By the way, you can go up to 5 new sessions in SAP without closing the previous session. So you have options like these things in the standard toolbar. Its title bar is basically the title of whatever you're seeing, or the list of applications are kind of being titled under the title bar. Beneath the entire screen is the status bar. This is where the status of your transaction is seen. So which system are you using? What is the transaction that you are using? Are you running a T code or a program? So these are the elements that are actually shown in the status bar. This is just an overview slide for you to understand that once you log in into SAP, this is the screen you see, and these are various terminologies that you use. Remember the command bar, the standard toolbar, and the status bar, because this is something you will very often keep looking at during the process. What is a T code? T just means transaction. So this is the way you interact with the system. In case you want to do, if you want to talk to your SAP system, right? The way you talk to the SAP system is via a T code. It could be a combination. It could be just numbers. It could be just alphabets, or a combination or alphanumeric. The T code can be alphanumeric as well. You would enter a T code in the command field. Remember the command field. This is the field where you enter a T code to talk to the system. So there are two T codes to create a T code. That is SE93 and SE18. So these are the T codes where you can actually say, Divya, I wanted to understand what are the list of T codes our company has, or what are the, because more importantly, I want to understand what are the custom T codes that our company has created. Know that besides the standard SAP T codes, an organization could also create a custom T code. And the terminology mostly that they would be using would be a prefix Y or a prefix Z. So this is where you identify that these T codes are basically a custom T codes. So you could access them from a table TSTC or TSTCT. So go to SE16 or SE16N, and you can just enter this table, and then you will be able to extract the list of T codes your company is using in your systems, basically. The reason why I've brought in this topic is you could always talk in a layman terminology with your auditees telling, I want to talk to the system using this specific code. But if you learn the terminology, this what kind of gives your auditee a comfort. So they know that an auditee is talking their talk, walking the way that they are walking in their business process. So the minute you start talking their terminology, is their way of attitude towards the system, so they know that you are pretty competent in your activity, so they can trust you. They have some trustworthiness with you. The more the auditee trusts you, the more the rapport you try to develop, the more efficient the audit process can be, the more information you could be getting it more easier, the more welcoming that they would be for your audit points. So it is very important that you be familiar with your T codes or the terminology of SAP. More importantly, few key T codes that you would be using as part of your audits. Uh, Shortcuts are always welcoming. They make our life much easier. So you're not expected to learn the shortcuts from day one if you haven't used SAP till date at all. But then try and use them as in when you start beginning the usage of SAP. So slash n, when you try to enter slash n \n in your command field, it basically cancels the current transaction. So remember, I said that there could be 5 new sessions that can be concurrently opened within the same screen. So you have slash n, which basically cancels your current transaction. If it is slash n xxxx, which basically means it initiates a new transaction. N is new transaction that it initiates directly from an existing transaction. XXXX is basically a T code that we're talking about. So if it, going back to the previous slide, if we are on SE93 and I give slash n SE80, so I will be able to come back from 93 to SE80 there. So if I give slash star XXXX, it basically calls the new transaction, but in the same window. It skips the initial screen. So if it is slash ns, you go back to your starting menu. Remember the screen where we have seen the terminologies of commands, application, and these things. So you go back to the starting menu from whichever screen you are in. Slash o gives you the overview of sessions. So if 5 sessions are open or 4 sessions are open, slash o gives you an overview of those sessions. If it's slash o xxxx, it means you are opening another session, keeping the current session as it is. So SE93 will still stay by, and slash o will take you to another session basically. If you want to end the session, it is slash n on the command field from your existing screen end. And if it is exit completely, it is slash n and ex. And slash I deletes your current session. A careful reminder in here, few of these shortcuts do not give you any confirmation or a warning message. So if there is any transaction that is still going on in between which is unsafe, there are high chances that you would lose them and you will not be able to recover them. There is no option that the SAP saves, just like a recovery file in Microsoft, for example. This is not how the system behaves. So you need to be really careful when you're doing using these shortcuts. But from time to time, when you're trying to get used to them, they come very handy, especially when you're kind of getting a hang of the system and doing multiple transactions in the short time. These shortcuts kind of are very handy to you. This is the crux of today's session that I would like to discuss. So every auditor beginning an audit, yes, it is a risk-based audit. They would do a risk assessment, try and understand the risk landscape. But in an ERP, we're talking about SAP predominantly here, but could be also applied to any other major ERPs or any other applications, I would say. These are the top ones that, at least from our experience and knowledge, that I have identified. There could be multiple small areas here and there which could be not there, but let's start with the data migration and go clockwise from there. Say suppose your company has been already using an ERP or about to implement an ERP, or maybe trying to move from a legacy system to a new system, or it's been considering to implement or kind of upgrade from an existing ECC version to a HANA version. In all of these scenarios, multiple areas of this could still apply to you and the organization you work for. So data migration, this is an area which talks all about data. Very important in the current era and generation we are living with. How is the data managed? How is the data from the legacy system being moved to the target system? What are the controls in the place, especially in the transit that the data is being moved? Is there any sensitive data? And how is the sensitive data being handled? Are there any external consultants supporting our data migration process? If yes, then how are we protecting our sensitive data from those external consultants? How is the data completeness being considered? Is the data accurate really? How is this overall integrity being managed? What is the involvement of business users? Are they owning and taking the ownership of their data? Business users are the end users of end custodians of this data. How are they playing role in the overall data migration? What kind of data mapping or data validation rules that are defined from legacy to the target system? Is complete data available in my legacy systems? Is any of the data available in, say, on an Excel sheet or a paper, on a piece of paper, because I did not have an ERP to manage for? So how are they moving that offline data to my new systems? In case they are moving that paper, the data on the paper to the target system, how do you as an auditor know that 100% of such data is actually moved to your target systems? So what are the validation rules that happen? What are the approvals in place for it? What systems of or technology is used for migration? Are they using any approved system? Is any of the data stored in the cloud for any transit? And where is this cloud host? There's so many questions that could be unanswered if not audited. So this is an area which is very, very important. You go touch base on the data migration, try and understand these elements or the questions that we are there, and then these are all the various key things that can be done in a data migration review. The second bucket is the design review or a configuration review. It need not be just for HANA or GRC or cloud applications. It also can be applied to the ECC or the non-ECC systems. So this is where you would be looking at the standard design of the system. How is the design setup? How is it configured? So there's a difference in configuration and the difference in customization. So you need to understand how these two elements are considered as part of the design. What modules are implemented basically in your company, and which of them are key ones. So you could pick up those things and then you could review the configuration. Please note that ECC or HANA versions basically could be different from, say for example, in HANA, the cloud type of applications, the design is a bit different compared to the normal HANA platform. So you might have to understand this difference when you're assessing the configurations as well. The next thing is the business process review. Without the business process understandings, you will not be able to look into the design element. The crux or the baseline or the foundation of a design is the process basically. So you might really want to review how the SAP process is designed in the first place, or the business process is designed. Are there any weaknesses in the design itself? By design, is there any deficiencies there? What kind of control gaps you could recommend as part of the process to ensure that you have a lot of process optimizations and efficiencies that you could drive through. So these elements can be addressed as part of the business process reviews. Interface integrity is again another key area that would be should be considered in your review cycles. So this is an area where you try to understand what are the different inbound interfaces to your SAP? What are the different outbound interfaces to your SAP? Are they connected via API? Are they flat file-based interfaces? Are they folder-based interfaces? Are there interfaces? Are we managing our interfaces, or is there a third party who is managing the interfaces? How is the data being moved between the two systems, system A to system B? Who is verifying this? Who has access to these interfaces? How secure is this data that is moving in the interfaces during the transit process? So all of these questions can be uncovered and assured when you do an interface integrity audit. Reports is another key area that needs to be considered. So in an organization, whenever they do an ERP implementation, there cannot be a system without a custom report. Normally, I watch out when doing a blanket statement like this, but custom reports are something which is so much important for the management that they have to rely on for the comfort of their reporting and their monitoring controls in place. So, custom report is more critical than normal standard report that comes with SAP. So, custom report is where you identify the list of important custom reports. In some cases, you could also do a code review that is being used to develop a custom report, or at least at a basic level, you can understand from an application perspective what is the table from where this information is taken in the report. Is the report complete by itself? Say for example, the report output is giving the quantity as 100. What is 100 stands for? What is the unit of this quantity? Is it 100 grams, 100 kilos, gallons, tons? What is the metric of it? So this is where the report completeness also comes in picture. The quality of the report is something which is very important to verify. There could be a lot of business and strategic decisions that could be driven based on the reports that come up in the system. So this is another area to be highly focused on. The sixth one is SAP infrastructure and cloud security. This is an area which is very emerging and of much need during the current generations, but it's mostly overlooked by a few companies that they're not looking at this thing, either because they lack expertise or maybe because they're not prepared to do such a review, whatsoever the reason could be, but this is one of the emerging area that need to be completely focused on. All the infrastructure, what is the security with our infrastructure? If it's cloud, then now that everything is on cloud, the era of cloud has started. There's also a meme that come up telling what are the clouds made up of. It's mostly Linux servers. So this is how the trending is happening on towards the cloud security. It's mostly important to look at what security controls we have for cloud based. Is it a cloud hosted within our geographic location, or is it hosted outside any other country? If it's outside, so what kind of laws do we need to abide by? In case of any disaster, how is the data being managed in the cloud? For example, what's the business continuity do we have? Who is handling this? How do you ensure that your data is backed up from time to time? How do you ensure that your company's data is not being made visible to anybody else? All of these elements come in as part of the cloud security as well. SAP basis and security, it's nothing to talk about. This is one horizontal pillar that just strikes through all of the areas that we so far spoke about. Without having a basis and security set up a good and well adequate knowledge, you will not be able to have a best SAP solution possible. So it's very important that you focus on what are your basis and security considerations, how is your overall SAP landscape setup, how is it being interacted, what are the security parameters, are you open for the environments, how is it being set up? So these elements can be considered as part of your basis and security. Project management to talk with. One of the common mistakes that auditors do, and also in some situations the business users think also, is that they go by the book. We do have a lot of good standards. SAP by themselves has a project management methodology. We have Prince, we have PMI Institute, which kind of gives a set of project management standards. I do not deny the fact that you shouldn't be considering them. Yes, you need to consider them, but you need to also understand as an auditor that every project within the company could be dealt differently. It could be based on the size of the project. It could be based on the budget of the project, based on the geographic location where the project is going to be dealt with. So it depends on the way that the project is driven. You cannot expect, say, for example, a document calling as project communication management. Maybe they just have an Excel sheet where list of stakeholders are mentioned, the periodicity of the review is being mentioned, the way to communicate is being mentioned. So there could be another alternate forms. That's okay. So the auditor's mindset should always be from, do we have any alternate controls in place? If not, the best possible controls that you're looking for. So risk mitigation is something that you would want. So if there is any alternate, that's still okay. Project management, the other key aspect is, especially in case any vendors are involved, is about the payment. How are the payment milestones managed? Are there any time and material contracts available for a specific project that is happening? So are there regular timesheets that are available? Who is reviewing them? Who is signing off on them? How is it managed in the system? So what are your controls from the budget that is approved, from the budget that is expensed? Are you going in proportional amount to your project progress? Who is maintaining this budget monitoring, for example? So these are the things that you could drive through from a project management review. But remember, auditors are not going to be a pain points to the project team by themselves. They're always trying to be a trusted advisors and trying to give you more help and support to ensure that the project is running in smooth. SAP licenses is one of the emerging area where not most of the companies try and look. But it is very important to understand the estimation of the licenses to begin with. How are they kind of being allocated to the users? Did you really request for the right number of licenses? If it's cloud number of licenses, how are you estimating the users? How is it being utilized, and how is the annual maintenance fee being charged? What kind of utilization you have expect projected, and then what is the actual utilization in case there is any negotiation on kind of exchange of any of the licenses? So how is that being reflected from a financials point of view? There's a lot more to talk about the licenses. Maybe when we do each of these areas in depth, we can talk about these areas on how to actually test the key controls in these areas. So these are the top nine areas, I would say, when you're trying to audit an SAP or any other major ERPs that we spoke about. So this should be your prime focus on. So you might not want to consider everything to audit to cover the wheel in the first year or of 1 or 2 years, but you need to identify based on the risk assessment what are your top things to be considered like next year. What are the things that could wait until the year after? So this is how you kind of assess your risk and then prioritize your assessment or the risk landscapes. Let's move on. So, in the business process, to begin with, I want to tell you something before we start off going to the procure to pay process and the review of procurement process here. One of the most important element that you need to understand is that understanding of the business process and being able to identify the risks in the business process is the first and foremost thing an auditor should know. Not just an auditor, but also as a business user. So identifying the risk is most important thing. You might not really know how to go into the system, way to navigate, what to click, how do you export. That's still okay. There could be n number of helping hands and n number of sources outside which could tell you how to mitigate that. But if you within an organization cannot identify the risk prone to your organization, that's a bigger risk than not knowing how to do it in the system. So, in a business process, if you are to classify the three major elements, it starts with the setup. So, what is the configuration of that process? How are you kind of tailoring this functionality? Is it a standard feature that you are using, or is there any customization that is applicable? So, we spoke about configuration is different from customization. So, configuration is nothing but a standard feature being utilized. Customization is tailoring that feature to make sure your business requirements are being met. The second most important bucket is the master data. It could be vendor master, customer master, material master, GL master, or employee master, chart of accounts to talk with. It could be any master data that is applicable in the SAP systems. The third important bucket is the transactional data. This is where you kind of do the transactions linked to your master data or the setup. So when you understand the business process, it could be any business process. Anything could be a first time business process that you would be working on. Try to map the business process in each of these buckets. It could be a combination of two things in some points. It could be a configuration for a master data, or it could be a master data for a transactional data. They are all linked. But put them under the primary buckets. Try and understand in a specific end-to-end business process, what could be my key configurations that are happening? What could be the best master data? What is the master data that is maintained in my process? What are the different transactions that occur as part of this business area? This is where you break down the whole big process into buckets and then try and assess the risks in each of these buckets. Then you can kind of understand and connect the dots. Each of this cannot happen in an isolated way. You need to connect the dots. That's when you try and assess telling for this specific transactional, if there is a risk in this transaction, then I'll need to understand this transaction is linked to this specific master data, and this is the configuration for that master data. This is how you assess risks. This is how you understand the risk. This is how you kind of come up with your initial audit program. Remember, we spoke that audit is not a predefined checklist, it's a dynamic process, and every company has its own business process. There could be few standard delta rules, but not everything could be applied everywhere. So remember, the three buckets is setup or configuration, master data, and transactional data. So this is the actual area where for today's discussion, we're looking at one sample business process, which is procure to pay. I've taken procurement as initially I thought of taking another example, but procurement has been very much close to our daily lives as well. So we have a lot of procurement in the house as well. So it's more easier to understand to give a glimpse of how to test, what to test. So I just picked up the procure to pay process. An organization that operates its business very in very simple terminology could either require some materials for production or either require some services as part of its operation. So to procure the services or materials, they could have in-house or they'll have to go to the market to get these vendors. So the process begins with identifying of the requirement, so where there's a requisition that starts up until payment to the vendor. So let's go to a skeletal view of the procure to pay process here. There could be three different sources where the requirements are fed into a purchase requisition, where it's a MRP or it's a plant maintenance plan, or from any other departments that come into. We'll get into each of these elements in depth eventually. So we go into a purchase requisition. That's the first step in a procurement process. Then we do a request for quotation where there's a hunt for the vendors and the right set of resources. Where depending on the quotations and finalizations of the vendor, there would be a contract that would be opened. Contracts are different in nature, and then you could do a release order against the contract. Remember the terminologies, and we will talk about them in the next few minutes. Or there could be a purchase order. So the next step would be after an order has been issued. If it's a material based type of an order, we could do a goods receipt. If it's a service type of an order, then we could do a service entry sheet in the system. And once this is being done, say the vendor has delivered the goods or met the service requirements that they were supposed to do, then you park the invoice. You will receive an invoice from the vendor, could be in a system or could be a hard copy. So you first park it. Depending on the verification of the invoice, then the payment to the vendor happens by means of a system. Let's go into each of these steps. The source for getting in the purchase requisition can be from three major areas. Material requirement planning is mostly for companies where they would want to where they have a criteria of maintaining some minimum stock levels. Say for there could be some continuous productions that are happening, and for their productions not to stop or hamper, or for the business continuity, there could be a minimum stock requirement. So MRPs could be one of the inputs for requisitions. Plant maintenance materials is another area where they would want certain vendors or certain tools for their maintenance of their plants. So this is another requirement that could come from the plant maintenance materials area. And the third common area that we all talk about is from any other department in the organization. There could be finance department who could be asking for it. There could be a HR department who would be asking for some services. So there are multiple sources that could be fed as a purchase requisition. So in SAP, the purchase requisition is basically an internal document, meaning it is still within the organization. It has not been given to any vendor outside, or we do not have any financial impact yet. So this document is an internal document that is mostly created by the end user themselves, depending on their requirements, and that's where the budget check happens. There is a standard workflow in SAP which checks the purchase requisition, that is called a release strategy. We will also go there in a while. So the budget, the type of materials required or services required will be checked as part of the approval process and be approved. So we use a SAP transaction called ME51N. Just enter ME51N in your command field, and you will be able to go to the screen of create purchase requisition. Or there is a menu from your application menu bar where you can actually navigate from the logistics up until the create ME51 of purchase requisition. So you see that there is ME51 and N. So ME51 or ME51N both mean the same. N just means it's an enjoy transaction. Enjoy just means it kind of gives you some flexibility on the way it appears. The ease of the layout of the screen is a bit different compared to ME51. But from a functionality wise, ME51 or 51N both does the same job. Request for quotation. One could argue when should we go for a quotation and when should we not. So if you already have an inventory of pre-approved vendors, as a matured company, you might already have been working with a couple of vendors whom you already know for this requirement, X vendor is suitable or Y vendor is suitable. So you might not want to kind of go for a request for quotation process here. But in case you choose to go for an RFQ because of unmet criteria of the existing vendors, this is the process that you use. You actually send out request for quotation to the market. You would receive your technical proposals where a technical evaluation is done by the end user who is requesting for the specific request, and then you would ask for a commercial proposal. And depending on normally they would go for whoever is the lowest bid vendor from in terms of the commercials, and then choose them. So this is the overall process of request for quotation. And normally it's not a day job or kind of a week's activity. It does take a couple of days to kind of do the overall process. So the transaction code to do the request for quotation is ME41. So you can use directly ME41, or in the menu You can navigate starting from the logistics up until the create of quotation here. Opening of contract is one major process in an organization. They could open the contracts can be of two types, by the way. It can be a quantity based contract or a value based contract. If a company decides to open a contract because they know that they would be repeatedly doing business with such vendor because the requirements could be repetitive in nature, they might want to open a contract with the best price possible. So this is where the contract opening process happens, and there could be steps for how the vendor should be registered, if there is any criteria to be met for the vendor to be registered. So this is where all of this process begins with. So ME31K is a T code that kind of gives access to opening of contract, or alternatively, you can also navigate from logistics up until the creation of contracts in the menu bar. Purchase order, this is an official document. So imagine you don't want to go for a contract and you want to go after a purchase order, a purchase requisition. Once your vendor is finalized, you might just want to go for a purchase order. So in this scenario, you will create a purchase order where your budget is kind of committed here. Your budget is more or less committed because this is a document that is going outside the organization to your vendor for the supply of materials that you requested for. So ME21 is the transaction code, or ME21 that you can be using it. And normally a purchase order is done by the buyer within the procurement department. You can also, instead of using ME21N, there's an alternate way where you can also navigate from the logistic within the menu bar up until ME21 for creating extended purchase order. The T code remains the same for contract release order. The only difference is that the preceding document for a release order is a contract. The preceding document for a purchase order is, in that case, a purchase requisition, basically. So release order is where mostly done against a contract that we spoke about. So it is just done under ME21 and with just a different category of creating a release order. You can also navigate from the menu, from the logistics materials management up until ME21, where you actually do the purchase order creation. Goods receipt. So once the purchase order has been issued to the vendor with a set of materials that are coming in the place, so you will receive the goods. So there are two things that would be normally checked here. So your inventory management is hit because there could be an update in your inventory. In some of the organizations, they also try to do a quality management where if it's a stock related items, they might also want to do a quality check on those items. Say suppose we have ordered books, we have ordered 100 books. So one the first check is, did I receive 100? The second check is, what's the quality of the 100 books did I received? Are any of them like moist and then torn? Should I return them? That's when the returns process happen. If everything is fine and then in place, then I do a goods receipt in the system. So there are multiple activities that happen. In any case, your inventories will be impacted, and then eventually, if you have a quality process, your quality check process will take place here. And only when the criteria is being met, then they call SAP transaction code MIGO for doing a goods movement, which is basically a goods receipt. So goods are getting moved into your inventory stock levels if it's a stock related items. So this is where Amigo is done. Remember, goods receipt is only done for materials, and service entry is done for services. Although the concept is the same, but service entry works a bit different compared to the goods receipt. For service entry, there is a standard workflow or a release process that is available in SAP. But for goods receipt, on the other hand, I'm not sure why, but SAP has not given a standard workflow for goods receipt. It is something that companies normally come up with when they're designing the system. So service entry sheet, as we are talking about, is for the list of services that you normally procure. And ML81N is a T code where you enter the service entry sheet. If the list of services are kind of provisioned by the company that you have outsourced to, then you go to ML81N and then you enter the list of services, maybe the rates of that services, and then probably get it approved for the final payment to happen. The last leg of journey would be the invoice handling. Very critical in the process, because this is where your money is getting out of the organization. This is where something called as a three-way match is happening. We'll talk about what's a three-way match. But the process is that once you receive an invoice after you have met the GR or the service entry, you receive an invoice from the supplier. You now check the invoice against your goods receipt and the purchase order. So three-way match is nothing but you will be checking for the quantity and price of whatever you have ordered. If the quantity and price is same in your purchase order, if your quantity and price is same in your goods receipt or service entry sheet, and if it is the same quantity and price in your invoice, this is a three-way match check that will be happening. But Divya, can it be always three-way match? We'll check that in the eventual slide. So we are talking about a control there. So we'll look at how to test and in what scenarios three-way match might not be a workable solution as well. So once the invoice is being received, if at all the three-way match is okay, it's in line with the policy, then the payment can be parked. If it is not, then the payment can be marked for blocking of it. So for parking of the invoice, you can use MIR7, or you either use a mirror transaction basically to enter the system. So at this point, the invoice is just parked. It is not still paid to the system, to the vendor, sorry. So there is an automatic payment run that will be scheduled, which is using F110, where a set of parameters will be entered in F110. So depending on the payment terms with the vendor, it could be like 30 days from the receipt of vendor from the invoice. It could be 15 days from the receipt of invoice. So this is when the payment automatically will be pushed to the vendor side. So an automatic payment run will be there. This is only for the parked invoices. The blocked invoices don't even get to this stage. So this is how the overall process happens. Now it's time to really identify what are the risks in this process. Now we have a fair understanding, if not very much in depth, at least what's happening in the overall procure to pay process. So let's see step by step what are the risks that could be applicable when we're trying to test the overall procurement process. The first risk that I would want to highlight here, which is a pain to auditors, which is pain to business users, it's a pain to the entire organization basically. It's the access. Access is one area which is really hitting all of them. But one thing to clarify in this slide, the message that I wanted to convey to all of you is that there is no standard access metrics that can be that is available currently. SAP itself recommends some access provisioning methods. Yes, there could be some consulting firms which could have their practices laid out, but then these are only from an experience point of view, it's been come out. Nobody can tell for such an organization you need to have so and so accesses restricted or limited. So let's first get into the concept of segregation of duties, which is basically segregating a conflicting duty between the two users or between the two resources. I've taken procurement example because we've been talking about procurement now. So we have maintain purchase order and manage goods receipt. So from the process, we know that goods receipt is basically a successor of purchase order step. So let's split the two activities. Activity A is maintenance of purchase order, and activity B is basically management of goods receipt. This is at a level 1. Level 2 is basically for you to identify what are all the T codes that can give me access to basically perform the activity. So in this situation, we know that ME21N or 22N basically helps me to maintain a purchase order. Likewise, for management of goods receipt, it can be MIGO or MB01. By the way, MB01 is an obsolete T code in the HANA version, but if you're still running on ECC, you can still consider MB01. That is level 2 identification. So level 1, you have identified the activities. Level 2, you have identified the T codes. One of the biggest mistake that auditors also do is that they try to assess users access at a T code level. This is a big no, big no. You in SAP, the lowest level of access is being given at an authorization value, which is associated with an object. So the concept of authorization, hopefully we'll take it up in one of the upcoming sessions. But for time being, understand that if you have to really verify users access, you have to actually go up until the authorization objects and values. Without considering the values tagged to the authorizations, you will not be able to get the right analysis conducted for users. If your company has been implemented or implementing GRC uh, very well, but then but from a conceptual perspective, you really need to understand that the lowest level is what needs to be considered for access provisioning. So in this example, if it's ME21 for create purchase order, so the user should have authorization or the authority to create a purchase order in his company for the company code and for his purchasing area. If he has only display access for that particular company code, then you should not be checking that user for it. He needs to have an authority to create basically. The way the system works is it would be checking as a combination of or and an and from a conflict perspective. So you should be verifying if a user has access to ME21N or ME22N and MIGO or MB01. If either of these T codes on the left hand and a combination of T codes on the right hand given to the user, then it means the user has access to a conflicting function, which is maintenance of purchase order and management of goods receipt. Let's see from an audit procedure perspective, how do we document this? So this is the risk and control matrix, or I would say for this particular testing procedure on how we have defined. The risk is that there could be unauthorized person who have access to a purchase order or contract or purchase requisition. What's my control? I wanted to ensure that if there's a right user access management policy procedure in place, the accesses are monitored periodically, so the right set of users have access to that. Let's go to the expected results and come back to the testing procedures. My expected results is that I wanted to ensure only authorized users have access to, say, for example, contracts. We're looking at contracts in the example now. So let's look at contracts whose users having access to contracts. So how can I know who is authorized and who is not authorized? At a very high level, you can tell contracts is normally done for somebody from the procurement department. So user falling in procurement could have access to contracts. If an audit team member has access to create a contract, makes no sense. It's obviously an unauthorized access. But can they have a display access? That's fair. That's not under your consideration. So you're only looking at who has access to create or maintain a contract in this scenario. In the testing procedure, the way it's been laid down for you for future reference as well is execute SUM in the command field again, and then there is a thing to navigate, and there are certain authorization objects that you need to enter in the system. So the next question that you could ask me is, I'm a pretty newbie to SAP and I have no understanding of what authorization objects you're talking about. If you look at authorization object 2, it talks something about M underscore RAHM. I don't even know what this authorization object is. Pretty fair. It's okay. You're not expected to know everything end to end in SAP. It's going to take a lot of time for you to get familiar with these terminologies and the concepts by itself. But SAP has a T code called SU24. In a minute, you will see that, where you will actually be able to see what are the objects considered for a specific T code in your company. So to start with, you can go to SU24 to identify for this T code, what are my objects to consider along with the values. So you can take a snapshot from SU24 and then go back to step 1 in the testing procedure, which is SUIM, and then execute your testing procedures as per your SUIM result. Yeah. Let's look at the step by step process of it. So my first step is I execute SUIM in my SAP. I click on enter. Then I navigate. This is the screen user information system I get once I enter SUIM. So I navigate from users by complex selection criteria up until by transaction authorizations. So in the transactions authorizations, I give ME31K. But remember, we spoke that we always also need to consider the authorization. So just click on the plus mark on top that you see, and you will get a list of tabs where you have authorization tab as well. So this is where you try and enter the authorization details. It's also available in the risk control matrix I showed you. So you start with the T code, S underscore T code ME31K. So here you're telling, okay, the user has access to ME31K and you see, and authorization object 2. So that's the next authorization object, which I have brought in from my SU24 in the demo system. So I have put in the activity there. 01 is basically for create. And then I have put in star in my purchasing document type. Star because currently I don't have any documents in my demo system, but in your company, you will have some document type that is created in your SU24. And then I'm also looking at the third authorization object, RAHM underscore EKG for activity 01 and EKGRP. So this is how I kind of input my details from a design perspective. So testing is not a big issue. The problem identification is a bigger issue compared to how you test. So once you enter this in the system, you go on top and click on that circle with a tick mark or click on F8, you execute the transaction basically. So this is the screen that you would see once you execute. You will see how many users have access to that. When did you test this? What was your date of testing? This is your working paper basically. So the business user can come back to you and tell, look, Mr. Auditor, you have probably done a wrong analysis. So and so user in my department does not have access, but you are telling that this user have access to my system. So you can always go back and tell, look, business user, basically the criteria of assessment is this because this is from the system directly, and we have considered up until the authorizations, and your team member basically has this access, which is an incorrect access. So on the second screen, you see on the red box, you see the user type, basically, the second column from the right side. You see dialogue and service users here. There are a whole list of other user types like communications and system and other users, but you don't need to consider any other user type besides dialogue and service. We'll talk about it in one of the sessions why only these users, but for time being, just understand that if a person has to dialogue with SAP or talk to SAP or interact with SAP, the user should be either a dialogue user or a service user. Only then you need to kind of consider them for users access analysis. Once you get this list, on the third screen on the bottom, you see that there is a small icon that is basically an icon for exporting your analysis. If you click on that, you will be able to export it to your Excel sheet, and then you can use that as your working paper, and you can give it to your business team members telling that as part of my analysis, I see that there are 17 users who have unauthorized access or access to create contracts, and this is not in line with your job duties. This is the analysis you could do for users access. Let me show in you a screen of SU24. This is the screen for SU24 where you can actually enter in the command field, enter the transaction code, whichever you have identified for the business. And then if you click on enter from there, you will see the list of authorizations. Onto the on the right on the right side, you see a S on the second column on the right. Basically, you see a few of them as S and few of them as no. So to begin with, you can at least consider all the ones with yes, and if you just double click on that, and beneath you see the values that are displayed. So the object authorization object is m underscore best underscore msa. The field that comes in is ACTVT, and you know what values to consider there. There are some non-critical values here as well, which is basically 03, which just means display. You might not want to consider that. So if you just click on the glass icon next to that, you will actually see what's the explanation for each of this. So you will be in more or less a position where you can define your design before you actually input that in your SAP systems for doing a manual review. But once you have GRC systems all up and running, and if you could rely on that, you can always do. But you should ensure that your GRC system is designed rightly for the right analysis to be coming out of your systems. So that's the first control. We spoke about the access. The second control, I'll just move in a bit fast in the interest of time. The second control I want to talk about today is sensitive fields for dual controls. It's vendors. So this is one of the basic controls, but yet very, very powerful. Let me explain you what this control is first. So when you're creating a vendor master detail and then saved during the process of implementation on a new record creation, say suppose you want to make any change to your vendor master. Say you want to change the bank account of your vendor master, or IBAN of your vendor master, bank key, whatever critical information you want to change. You can this control enabling setting up this control will basically ensure single user is prevented from changing those sensitive fields in the master data. So if Divya has access, say for example, to maintain master data, vendor master data, and also process vendor invoices, when once I get an invoice, I can very well go back to the master record and put Divya's bank account instead of a vendor bank account there, and then process it. So which means I'm getting the money in my account, and say I'm leaving the organization. Just a hypothetical scenario, so I can get billions and millions into my account, and then I can process the invoices and then leave the company. What happens next is a different story, but for time being, this can happen. So to prevent this, what can happen? I can just set up bank account detail as sensitive in nature, which means when Divya is going and changing the sensitive detail, Divya's manager has to go into the system and basically tell, okay, approve. Only then I can go and make the payment. So this comes handy in two scenarios. One, prevents any unauthorized changes in the vendor master. Two, the single user can be given two activities or two duties. It also inherently prevents segregation of duties, the risk of having the conflicting access with the user because of simple one step approval. This is a standard control, no customizing is required. But then 90% of my of the companies, when I was a consultant, when I was looking at this control, they're not aware about this simple setting. So this is for dual control, or also called like a four eyes principle, where somebody else is actually checking for a change in the vendor master. Let's look at the risk and control for this. The risk is that there could be any unauthorized changes that is happening to my master data. Any key field like a reconciliation account, bank key, or anything. Control is that I want sensitive fields to be identified there. The testing procedure is that I go to SPRO, I navigate to financial accounting, and then up until the sensitive fields for your control there. I'm sorry. My expected results in this scenario will be that I want to ensure all those sensitive fields are identified and then approved by the second person. So you see that something is highlighted in bold for you there. The manager of whosoever is changing can go to FK08 for vendors if it's a single transaction and approve the change, or FK09 for a list of changes that are happening. So in either scenarios, you're trying to ensure that the changes done by one person is definitely looked upon and authorized by the second person. So this is what your control step talks about altogether. So let's do the testing. Let's follow the testing procedure in the system directly. Go to SPRO, click on SAP reference IMG. You can click on F5 basically to get into the screen, or just double click on that. Navigate from financial accounting, receivables and payables, vendor account, master data preparations, and then you will see in the last but one, which is basically define sensitive fields for your controls. Here I see that for account type vendors, there is only one sensitive field identified in the demo system. I would have expected in the real production system for the reconciliation account, bank account, all of these things to also be kind of specified. I'm sorry. But how do I ensure that whatever has been defined here is sensitive in nature? Let's take an example of payment terms here, right? At a purchase order level, remember we spoke about the invoice will be paid based on the payment terms to the vendor using F110. If I have access, if say suppose I have not defined payment terms as sensitive here, and if Divya is doing the payment posting for the vendor and also having access to the maintenance of vendor master, what Divya can do is they can go back to the vendor master and change the payment terms, say from 30 days to 1 day, and then go ahead to the vendor and do a favor to the vendor to process the payment. The next argument one can have is, what's the issue? We anyways have to pay to the vendor. So what's the problem in making the right payment? In in a company who is mid to small size companies, right? They manage their cash flows. They might be dependent on any incoming receivables for making an outgoing payment. Maybe I could have a receivable due in a week's time. and maybe plan to make a payment in a 30 days from then. So to avoid any cash flow issues, it is important that such terms, such critical elements are also identified as sensitive. Anything that is sensitive to the business process, anything that could hamper the business operation should be identified as sensitive here. Let's go on to the third control, which is related to master data. Define account groups with screen layout. So when you're defining a master record for vendors, for example, you might want certain fields in the master data to be mandatory or optional, or maybe grayed out. You don't want to make any changes to that. So this is where you define those controls for vendor master data. So in the account groups, you have like 4 different options: suppress, optional, require, and display. Please pay very good attention to this, because this is a very basic control, but a short mistakes happen in this area, no matter how many number of years it has been running with SAP. Suppress is basically that field is completely hidden. You don't even want to see certain fields. For example, for example, what's the language that you want to communicate with the vendor? You might not want to see that field when you're doing a vendor master for some companies. Optional could be an area where you want to display the field, but it is up to you to choose if you want to enter in some information or no. Optional by default is optional, of course. Require is like mandatory. Vendor name, bank account, for example, reconciliation account, alternate payee account. These are the things that you would want to keep it as a required field for to ensure that your master data is being right. The last thing is display. This is a field which is just like displayed on the master record, but not permitted to change anything. This is the display field. Let's take an example of it, right? Maybe you're creating a vendor master record and you want to enter a GL account of the vendor. So, but this has to be definitely a required field. You definitely want a GL account to be entered for the vendor. Now, should the GL account be input by the procurement team, or should the GL account be coming in from the finance team? Definitely from the finance team. So in this scenario, the GL account for the vendor could be set up as display, where you see the information, but you're not allowed to change anything from your perspective. So that's when the display also comes in picture. But in the account groups for screen layout, when we get there, you see that there are a few settings that are available in more than one place. Say, for example, payment terms can be available in one screen. The same payment terms can be available in the third or fourth screen as well. So in one screen, you can tell it is optional. In the other screen, you can set it up as required. So how does the system behave? So this is the priority that we see that could be considered in SAP. It works on the principle of SDRO. So if in one screen you have given it as optional, and the other screen you have given it as required, by the precedence level, required will take the highest precedence over optional. So it's as good as optional is not even being set up or being defined. But know that you cannot, by means of all senses, you cannot give suppress and require to go together. It makes no sense. It is an inbuilt control to give you a warning or kind of an error message. You cannot suppress a field and you cannot tell you have to input as mandatory field. So that's how the combination of logic works in place. But remember that SDRO is very important or required specifically to ensure all your master data or vendor master details are complete and comprehensive, and all the important details are kind of part of your master records. So my risk will be, of course, I will not have I will have incomplete or inadequate master record. Control has to be, please try and set up those SDRO fields in a way that I will have right amount of detail. And my expected result will be important fields like email, mobile, payment terms, methods, invoice validations, GR based invoice verifications, like key fields are identified to be within the SDRO concepts. So this is what we would check. Testing procedure, I'm talking about SPRO testing. Let's directly go into the testing and see how to test this control now. Go to SPRO. Then you navigate to SAP reference IMG, then click on F5 or just double click on that. You will come to display IMG. So you keep seeing that SPRO, we're kind of repeating it. So that's the major place or the T code that we use for defining most of our customizations or setup. So most of the SAP is designed using the transaction SPRO. So we navigate from financial accounting new to accounts receivables and payables, vendor accounts, master data, up until define account groups with screen layouts. Just enter this. You see a lot of vendor accounts here. In most of the companies, they also treat few of the employees as vendors for whatever for multiple reasons, and it is they have some genuine justifications as well. So in this scenario, let's see an example of a vendor by default. So I am just double clicking on 0001 group, and I see that there are three different field statuses: general data, company code data, and purchasing data. In general data, I have set of options starting from address, communication, payment transactions. In company code data, I have account management, payment transactions, correspondence. In purchasing data, I have purchasing data, partner data, and some additional purchasing data. If we are to look at the general data here, let's just double click on the address, and we get a list of icons that are to be set as SDRO. So this is the place basically where they set up which field should appear as mandatory, which field should be display, which has to be suppressed or required. So I'm looking for the name should be required, but then it's optional. I'm looking for the post office. Maybe if I wanted to do any communications for them, I don't have this option here. And then I wanted to go to the next page. So on the top, you see the page up and down. So there, that's where you actually navigate to other pages. And how do you know that there are more pages? So on the screen on the right side, you see it's page 2 of 3 and 3 of 3. So you know that there are more pages there. So you might want the mobile number of the vendor to be as a required entry. You might want internet mail address of it. If some company is basically able to deal with the vendors only via fax, they don't have any other means to talk to, so you might want the fax to be mandatory for that specific vendor group. So if somebody is having a plant or a production operations where nothing is possible but only a fax machine is available, so you might want the fax to be a critical one and set to as required entry basically. Within the payment transactions, you want the bank details to be maybe suppressed. You want the alternate pay account maybe suppressed, because this is coming from the finance account. Or if the procurement is the custodian of such information in your company, maybe you need to have it as a required entry. But at least you need to identify these things instead of keeping it as optional, because it gives a flexibility for them to create even a blank vendor record with no information. Let's go into the company code data, where we have again four subgroups: account management, payment transactions, correspondence. So within the account management, I might be looking at reconciliation account. Personal number is just put in for the sake of discussion, but then for a vendor group, personal number might not be applicable. In a company where employees are also treated as vendors, that's where you probably want to link employee account or employee ID number with the vendor ID number. So this is where you actually go back to personal number and try to keep that as a required entry to kind of link this stuff. A quick question can come in telling, Divya, maybe because you've been doing this, so you probably would know which field to be chosen as what. But I really have no understanding. Remember, we spoke about not all auditors can need to be an accountant. So I have absolutely no understanding of what is a reconciliation account, which is very fair. So what you do is just click on the reconciliation account using F2, and you will get kind of a pop-up box which talks about a field check. So when you double click on the reconciliation account there, you will have a definition that is going to be coming up as a pop-up from SAP itself. So you can read through this definition and understand what a reconciliation account is all about. So if you just read through it, you can see that reconciliation account in GL accounting is the account which is updated parallel to the subledger account. Okay, there is another thing which is subledger account. You probably might not be 100% understanding about it, but you know that this is something that is related to accounting, and maybe this needs to come in from the finance team, and probably this needs to be a suppress, and it has to be definitely required. But am I supposed to give this, or finance is supposed to give this? Let's keep it as suppress because finance is giving it in my organization. So you can understand each of this field. A small maybe the floor of the vendor might not be important to my company, but might be the very important to your company, specifically when somebody wants to send in a hand mail to the vendor. So you can pick and choose the criticality of these fields depending on the way that your procurement department is working on. Terms of payment, remember, under the company code data, we are looking at terms of payment. There's another place where we will also be seeing the terms of payment, and we will there then understand why the priority of precedence SDRO concept comes in place then. So alternate payee is optional, a double invoice validation you would be checking for here. In the purchasing data, we have again three subgroups. So terms of payment, we are also having a terms of payment in the purchasing data. So if I set a terms of payment in the company code as optional and terms of payment in here as required entry, by the order of precedence, it would consider terms of payment to be as part of my required entry. GR receipt based invoice verification is basically for the three-way matching. So this has to be kind of required for three-way matching to be enabled. So you will see the importance of this when we are looking at the transaction of related to the purchase orders. Business partner assignment is important, specifically if your company is running on HANA instead of an ECC platform, because this is where they would kind of map a business partner with a vendor account. Because now in the HANA concept, no more vendor, no more customer. It is all called business partner. And the transaction to open a vendor account in the new HANA system is BP. So if there is a BP assignment that needs to happen in the vendor creation, so this is where the linkage can happen basically. So that's the third testing procedure, which relates to what are the important keys and how should they be set up when a master record is being created. Let's talk about the fourth one, which is release procedure. Very important concept in the overall procurement cycle, because this is where most of the issues occur, and this is one of the burning issues to both the teams, because it has to be in line with an approved delegation of authority. The way that it is being mapped from the document which is approved to the system is there could be a lot of integrity issues there. So for the sake of time and understanding purpose, we will only be looking at the purchase requisitions release strategy. But from concept and the testing, it is applicable for the purchase orders. It is also applicable for service entry sheets here. So for the release strategy, there are multiple steps that are to be taken for the final release strategy to be determined. So there is a release code that needs to be there, some release indicators that needs to be there. There should be an assignment and some prerequisites, and then a release strategy will be there. Release strategy is nothing but an approval workflow. It's just a mechanism of approval. Who needs to approve what, and to what, up to what limit can they approve? In which company can they approve? Under which category of document can they approve? Can they approve goods? Can they approve services? If yes, up to what limit? So these are all different indicators. And if there are three people in the approval workflow, uh, should all three approve, or is it a combination of three? Can any two approve, or should three of them approve? If it should be three of them who should approve first? Is there any successor before the second person approves? So all of these parameters are defined in the indicators and the prerequisites area for the strategy to be working fine. Let's look at the risk control matrix for our release procedure. My risk is obviously if it's unapproved or approved incorrectly, then incorrect orders will be processed. I could also have a financial impact in case if it's not approved right. My control is as good as the release strategy has to be defined. In this case, for purchase requisition, in line with my delegation of authority document. And my testing procedures, we will just go to the testing area and check directly. Expected results, of course, has to be that in the delegation of authority is interpreted well, accurately, and then defined correctly in the system. Let's go to the testing procedure itself. I start with SPRO. As I said that my configuration begins with SPRO. And then we go to SAP reference, which is basically the next step. And then go to materials management. and navigate up until purchase requisition, and you see there is a release procedure where setup with release procedure. Once you click on setup with release procedure, you see a small pop-up that comes with release groups, codes, indicators, strategies, and workflow. If you're a business user attending this session, you probably will have to go up to groups, codes, indicators to understand how the mapping has been done, how the design has been set up. But if you are an auditor, if you directly go into the strategies, you will still be able to understand what are the groups and codes that are assigned, because strategies are where all of these are kind of cascaded down. So I'm clicking on release strategies, and I see in my demo system there are three groups, three strategies starting from ZC to ZP with three different strategies, C1, A1, and A2. So I see that the first one has a release strategy up until 400,000 euros. So when I click on 400,000 euros, I see it is a one-step release. So P1 is my release code, and UX demo is basically the step of the release that happens for the limit 100,000 to 400,000 euros. So the bottom of my screen, I see four different icons or options: release prerequisites, statuses, classification, and simulation. Let's look at what's this prerequisites mean. My prerequisite says for a release to happen, P1 should mandatorily approve. This is my prerequisite. And the status says that if P1 is not approving it, you see that there is no check in the first box, it's going to be blocked. I cannot do any further transaction if P1 doesn't approve. If P1 approves, then I can proceed to a purchase order there or a request for quotation, because remember, these are the next subsequent steps for after the PR is being done. So this is how you're linking the process to your actual workflow that has been set up in the system. So you know that mandatorily there is one level of approval, which is P1, that needs to approve. If it is not approved, then you see a status of blocked. Classification is overall release strategy is very important. Classification, if you zoom in, is way more important within this domain. This is the exact interpretation of your delegation of authority that comes in. This is where the requisition, what kind of documents need to be approved, what is the total value that the person can approve, if there is any accountment assignment that has been defined, it comes in here. If there is any purchasing group that needs to be defined, this is where it has been set up here. So you need to verify this in line with your delegation of authority. One of the common mistakes that happen here is that there is an overlap of item here. So this release strategy or with this release group has 100,000 to 400,000 euros. There could be a release group, the second release group, which starts at 400,000 euros again, up until say 800,000 euros. So what happens if your purchase acquisition value is equal to 400,000 euros? The system is confused basically. Should it go to release 1 or release 2? Because both of them have a value of one has an upper limit of 400,000, the second one has a lower limit starting 400,000. So this is where the interpretation has to be done very rightly. The next one should basically begin from 400,000.01 or 400,001 on whatever it is, or greater than 400,000. That is how it has to be defined to ensure that the values are not overlapping. Release simulation basically tells me that upon P1 approving, the overall status of that purchase requisition is a final release. Until P1 approves, it's going to be in the block status. So this is how I know that what is the prerequisites of my release strategy, what are the release statuses that are available, how is the classification happening, and how is it being simulated to ensure that it is being finally released. Since it's a demo system, I couldn't show you with 3 or 4 levels of approval, but I managed to get at least a 2-level approval to show you how it works. In this situation, I am saying I have 2 levels of approval, P1 and P2, and the requirement is that P1 has to approve first, and then only then P2 can approve. So this is where I am telling, and it also says that the priority is P1 has to approve first, and only then P2 can approve, which otherwise cannot happen in other scenarios as well. So this is something that needs to be considered when you're looking at the release strategies. Very important is you need to understand how the finance has been giving the delegation of authority metrics. First point, how latest is it, and does that make sense by design, and then how it is being interpreted and then be designed in the system. This is from a design of the system. If you look at the RCM for this, I would have also put in some text there for operating effectiveness. So there are some vendor master tables that are available, which you can also use to do some transactional analysis to really see if my purchase requisitions really followed this release strategy, or was there any purchase requisition that kind of bypassed this release strategy. Those are more like analytics that we could also talk about, and a bit of advanced testing that need to be also performed and considered in such reviews. Let's talk about one of the last primary key control for today's session, which is the tolerances or the three-way matching. We'll be talking at a tolerance at a goods receipt level and also at an invoice level. Tolerance is nothing but it's just like our tolerance. We have tolerance to take up something at work, something in personal lives. So system also has some tolerance to accept any deviation from the originally defined values. So goods receipt is basically the tolerance of the goods receipt is basically the system checks whether the value in the goods receipt is it different from the purchase order value or is it fine. If and there are three different keys here, which is B1, B2, or VP. There is absolutely no explanation why it is B1 and B2, why it is not D1, D2. This is how they have defined SAP in the SAP. So we just have to follow their conventions. And from audit side background of it, we need to be focusing on B1, which is an error message. Error message is basically a preventive control. B2 is a warning message, which is as good as control not even being there, unless people are really mindful of going back and changing the things. But human errors are always possible with a warning message. So B1 is a key which is used as a tolerance for goods receipt. Depending on the percentage of tolerance that is defined in B1, the system can give you an error if the goods receipt value is same as a purchase order or no. Can the goods receipt be posted or no? So if I've ordered for 100, if I've received for 100, then there's no discrepancy in it. If I've ordered for 100, if I've received 105, can I accept it or no? You can accept it provided your higher level, upper limit of tolerance is 5. So 105 is still okay. If I've ordered for 100, can I take in 95? Yes, if your lower level of tolerance is 5. If your tolerance is 0, which means you have to order what you have received. You have to receive what you have ordered basically. There could be an argument telling you should always receive what you have ordered. I mean, why do you even want the tolerance key to be set? There is a genuine business scenarios in most of the companies. Let's take example of like any liquid that evaporates during the transit, right? Say suppose you're ordering 100 liters of water, for example. Maybe if it's a container that is subject to sunlight, maybe during the transit there could be some leakage and some evaporation could happen. Similarly, like sand, maybe company wants some sand for civil works or civil projects. Maybe there could be some leakage of the material when it is coming by. So, depending on the type of material and the type of orders that the company would be interacting with, there could be an acceptable level of tolerance that would be defined in the system. But we want to ensure that company is not completely at loss as well. We understand the transit problems, but at the same time, we want to ensure we are not at loss. This could be the lower level of the leakages and stuff. The others can argue my upper limit has to be exactly the same, it has to be 0 0. I cannot get more than this because my inventory cannot sustain it. But there could be a scenario, for example, you're ordering maybe a paint bottle of 75 ml maybe. But the vendor can tell, listen, Mr. Company, you wanted a 75 ml of golden color paint, but then my container only comes with 100 ml and I cannot give you 75 ml. So even if you're charging me for 75, okay, but I can only deliver you 100 ml. So that's where my tolerance key is 25 there, so where I'm able to accept this amount of difference also. That is the goods receipt level. At an invoice level, we will be predominantly looking at the difference in price with that from the invoice with that of a purchase order or a goods receipt. So we're trying to check at a goods receipt level with a purchase order as well, and also at an invoice level with a goods receipt or a purchase order as well. So three-way match, we will be ensuring that the three-way match is being considered in this element. There are multiple keys, tolerance keys at an invoice level that will be there, but our prime focus is only on two keys, DQ and PP, because these are the keys meant for quantity and the price variance. I'll not go with the description because I have an example to show and how the formula is being calculated. You are not expected to memorize the formula or know the formula, but it is good to understand how SAP is behaving when few numbers are being entered as part of our business transactions. Let's go to our risk and control matrix for this. Summarizing the risk, if there is a difference in quantity and price in the GR or in the invoice, of course, my inventory could be impacted and I can have financial impact as well. My control should be very obvious that I expect the tolerances are defined as per the business expectations and knowledge. There should be no tolerance that is absolutely incorrect. Just because I need to have tolerance, I cannot have 100% tolerance. I cannot have zero tolerance as well, knowing that my materials will not be exactly the same I would receive. This would be my expectation. And the testing procedure again will be from SPRO because this is a design related testing. So we will navigate through materials management module for goods receipt, and for invoice we will navigate again through materials management but go up until the invoice verification stage. Let's get into this. So the first step is obviously SPRO, where I would be going into the screens. Then tolerance for goods receipt. So this is for my goods receipt. I'm going to materials management, navigating to inventory because my goods, I said you that it would impact my inventory. So logically talking, this is where the configurations will be there. Goods receipt and then setting of tolerance limits. So here I see for B1, this is not checking anything for lower limit. Forget about the values here. It's a demo system, but typically it has a percentage of check that needs to be defined as a check limit upper and a check limit lower. So upper limit is checked at 25%. So if 100 is my order, I can go up to 125. Lower, if 100 is my order, if I'm getting 50, the system is not checking anything. So this will have an inventory integrity issues, and also my payments could be impacted from here. This is where you can check for goods receipt. Very simple check, but then has a very powerful impact on the way that the business would operate. Tolerances for invoices. So we still hit the same materials management, but this time we will not go to inventory management. Invoice happens at the invoice verification level. So we go to logistics invoice verification, invoice block, and then setting of tolerance limit there. We spoke about invoice is going to be blocked if there is a discrepancy in the three-way matching. That's why the setting is also within the invoice block. It's a bit tricky that people find it hard to understand SPRO configuration, but it's not that tricky as well. So once you kind of get hang of it, if you try to understand the business scenario, you will be easily able to relate to the configurations backend. So as I said, there are multiple tolerance keys. TLKY is basically a tolerance key that could be applicable for various companies. Our prime focus will be DQ and PP. So when we look at the DQ here, unlike the GR, which only had a percentage tolerance, the DQ, which is for quantity variance, has absolute and percentage both, upper and lower limit. Absolute is basically the absolute value. If it's 5, then if it's 100 is my quantity, then the 5 is basically 95 or 105. Percentage is basically 5% of the quantity or price basically. So if you are using absolute, then the percentage will be do not check, and vice versa. If you're using percentage, absolute will be do not check. So this is where you're given the values for quantity variance. Let me take you through an example for better understanding of it. So there is a formula that the system checks. Let's directly go into the formula and the way it checks. Let's go into a system behavior portion of this slide. So let us see that the system behavior, if only absolute values are maintained and percentage limits are marked as do not check. So we are only considering absolute values of upper limit 100, lower limit 100, and I'm not checking anything for percentage. This is my data. If my PO quantity is 100 with a price of $100, my GR quantity is 50. So which means I have a partial delivery. Very much valid scenario. But my invoice is made for 51. Maybe the one quantity is lost during the transit, which is fair. So how does the system check? This is the backend calculation that SAP does. PO price, which is 100, multiplied by the current invoice price, which is 51, minus the minus of total order quantity, which is 50. So our GR quantity is 50. We still don't have the total quantity invoice. It is 0 yet. So when we try to summarize this, we have 100 as the outcome. Our upper limit is 100. So it is okay, and we will not have, it's still okay to post this invoice because we will have no warning message. Let's consider another scenario where it is 52. Our PO price is still 100, but invoice this time is 52. But we have only received 50 as part of our GR. But the total invoice in this scenario as well is zero yet. So when we look at this calculation, we have a variance of 200, which is over and beyond my tolerance level of 100, which is defined in the system. This is where the invoice will be blocked for payment. It will not hit the F110 step for further processing. The calculation remains exactly same for lower limit as well. So this is how it works. You don't have to really remember manually calculate for your auditing and non-audit for auditing purposes, but know that this is how the warning messages are triggered internally depending on the numbers that go into the system from a PO, GR, and an invoice perspective. The next tolerance key that we would be looking at is the purchase variance, which is price variance, which is PP. So we have here lower limit of 10 and then percentage of 10 again. Normally they don't do both absolute and percentage. It is either of them. But sometimes if it is done, at least you need to check that they would be in sync. Normally they would be in sync. So you have an upper limit of 10 and you have a lower limit of 10 in both situations. So in the system behavior, let's look at it. We have a PO price of 100, for example, euros, and we have a PO quantity of 100. So the total value is 10,000 because it is 100 euros per item. The, the total invoice quantity, IR quantity, is 10,010 euros. So, but IR quantity is also 100. The IR amount is basically 10 extra compared to the PO total value. But how does it calculate? It checks the IR value minus the PO value, which is 10 euros, which is still within my tolerance. So that's fine. You're charging me 10. It could be basically any of the freight charges that could be applicable, any of the taxes that could be applicable, road taxes that could be applicable, or transport taxes that could be applicable. So this could be a reason why I've been charged a bit more than what I've expected in my purchase order, which is fair. In scenario 2, where my price, quantity, and value remain the same, but my invoice price is increased at 11 euros now. So it's 10,011. So when I do the difference of it, so there's a typo, basically it's 10,011 minus 10,000, which gives me 11 euros. So this is over a tolerance of my 10. My tolerance was only 10. So now I have excess 1, which is 11. So this will actually block the payment, and I will not be able to proceed ahead with making the payment as well. Overall, this would be the control check that you would do at the goods receipt level as well as the payment level to ensure your three-way matches are being completely done. So this is the session I had planned for, to give you a brief understanding of how this audit works altogether, how the controls flow in. There are multiple other controls in procurement, could be inventory controls, movement type controls, but the key ones have been discussed. Let me just go into the chat box and see if any one of you have any questions, if I can take up one or two in this. Okay, I have some private messages telling, is this video available somewhere? Oh yeah, you have some response back. Can this PPT be shared on, okay, the email? Sure, okay. If you can, I am pretty new to SAP. Please, can you explain more about the authorizations in any of your sessions? Sure, okay. We will be considering some of the IT general controls hopefully very soon, so we can consider those in the sessions. You have one another question was, Divya, you spoke about the reporting. Can you please share any sample template of the report that is there? Okay. Every audit report is kind of confidential in nature. But then if you really want to have a version or a template of it, there are more free sources available. I think ISACA also kind of publishes some good mechanisms for reporting. So you could definitely verify that. But in general, if you want to understand what a report contains. It kind of includes a background about the overall summary of your audit itself, like what has been considered, what has been reviewed in the audit, what was your period, or what was your sample, and what is the major gap you have figured out as part of your audit, and what is the potential implications that could arise because of the gap you have encountered, and how do you want to solve them, what are the recommendations you could give them. This is what will be provided. So there is another question on action plan is suggested by the question from the reporting section. Divya, is the action plan suggested by the auditor, or auditor takes input from the company officials? Okay, good question. So, recommendations is something that goes in from the auditor. Action plan is something that comes in from the management or your auditee. But in scenarios where the auditee doesn't understand as to how to take this about, the auditor kind of suggests what could be the action plan. But ultimately, it's the decision of the management or the auditee to take a call on how the action should be considered as part of the report. Uh, there is another question. Thanks for the session. Okay, it was very nice. Do we have continued sessions of these? Yes, we do have a few sessions upcoming as well. And then you will see in the next slide what are those sessions. It will be posted on my LinkedIn for you to kind of have a track on. There would be series of sessions. I cannot tell on exactly which date, but predominantly it's going to be 2 or 3 weeks from now. So just stay tuned on LinkedIn, and then you could probably also write to me on the email that is kind of there. So divya.sapiens@outlook.com is the email that I am using for all of the training sessions. So you can post in your questions there, and that's my LinkedIn URL. So you can follow me on LinkedIn to kind of have an update on the next sessions. And whatever we are speaking now, I try to have it recorded on a YouTube channel called Sapiens or Sapiens or whatever. Just visit the YouTube channel in case you want to rewind it. It's a lot of content, especially if you are a newbie to SAP. So you could play again and again, try to verify, try to practice. That's the only thing that gets you hands on, gets your hands dirty. That's when you kind of understand it more. Another question that I have, hi Divya, what are the T codes auditors should have access to in the SAP system? Very good question. This is one of the burning topics that we also have in our organization, and likewise in most of the companies, I would suggest. One thing I could tell as a baseline is that depending on your audit scope, you could request for whatever access that would require it meeting your audit scope. But in general, as a baseline principle, as an auditor, you could definitely have access to only display related transactions. You could be part of any kind of business activity, but have yourself kind of independent from actual operations of the business. You could have display transactions to what the business is acting on, but try not to have create access or modify access to any of the transactions. So as in general T codes, I would say you would be requiring table access SC16, SC16, and which is a very bare minimum to have with. And all the business related transactions, whatever business is using, you would want a copy of it, but at a display level. So it's very hard to tell like these are the thousand list of transactions you would require. It varies from company to company. The best way is look at your business processes, try to identify your business areas used, and identify those transactions to be part of it. Another question I have, appreciate if you can share the PPT used. Please drop in me a note, Shri, on divya.sapiens, so I know what's your email, so I could share the PPT. But as I said, it's also available on the YouTube for you to go back and play it. Is there a sandbox where we can practice the T codes and see the outcome? There are a lot of IDES, SAP IDES providers out in the market where you can just reach out, where you can get SAP access for a small amount, where you can give it a try. Alternatively, you can also check within your own company if there's any demo system or demo environment that's available where you can play around a bit here. I think a few more questions are there. When do you want? I think that question is answered. Okay. I hope I haven't missed anything here. All right, great. I'm sorry, I'm a bit over time here. Apologies for that. Thank you all for joining in today. I really appreciate your time, and stay tuned on the LinkedIn for the next session. We will catch up next time again. Have a good day ahead. Bye.